All right, gentlemen, we are going to move right into our next session. The remainder of the sessions that we have today are going to be fast, hard-hitting, and we're going to get started with one right now. We're bringing some new nameplates up, but I'd like to welcome back to the stage Dusan Stojanovic. We are going to be talking about early exits. He is the master of exits. Part of the legend of Dusan is his 3 exits in 10 days. Absolutely amazing. So we welcome back the founder and director of True Global Ventures back on stage as our young gentlemen quickly move to replace the name plates. We would like to welcome Paulo Andres, the emeritus president of EBAN out of Portugal. Paulo Andres, thank you so much. We appreciate you joining us. We also welcome, is it Banu Taksin? Banu Taksin, thank you very much, head of private banking for Turk Economy Bank, TEB. Banu, right over here. Wonderful to see you again. Thank you very much. So ladies and gentlemen, one more time. We have Banu Taksin, head of private banking, Turk Economy Bank. We have Brad Bulat Yassar, who's joining us from Blockchain Investment Consortium, Dusan Stojanovic, True Global Ventures, and Paulo Andres, the President Emeritus of EBAN, all the way from Portugal. The floor is yours, Madame. Thank you.
Okay, thank you. Hello, everyone, and very welcome. We have really valuable speakers here because lots of experiences, especially as an investor, entrepreneur, and also for the exits. So our subject is early exits. So I don't want to take time because there are lots of valuable speech and the experiences here. First, let's start with Paula, maybe. Can you please first explain what does really early exit means?
I think that when people talk a little bit about early exits, sometimes people consider that an early exit is a success. It can be a success for some people, but on a long term, it may not be a success. I remember sometimes people, some years ago when crowdfunding came, people were saying, with the crowdfunding, this will remove angels from the market because people are able to raise money in 24 hours, 36 hours, and so it's a huge success. And of course, if you measure by time, it's a huge success. But for me, to be a success is someone that raises money, and then after some years or whatever, it returns money to the investors. Because if it's just about speculation, of course, in the beginning, a lot of people come and create the bubble, but in the end, the bubble will burst, and then the market is over. So, of course, all the investors would like to have an early exit, but an exit that can be sustainable for the market, and that this company has fundamentals behind it, and it's not just a scam, as Dusan said in the morning, that sometimes there are scams there. So that's what I think it's relevant to talk when we talk about early exit. Yeah. And sometimes I've been an entrepreneur, and I've done an IPO. And if I tell my investors at that time that I would exit 1 month after, the value of the company would go down. So there must be transparency from the side of entrepreneurs that when they will exit.
So you mentioned that it's really very important. We're mentioning early exits of not couple of days, of course, not speculation. So first of all, you should put your value on the company, and then a couple of years later, exit is much more valuable, right? Am I?
Yes.
So, Sam, can you? Yeah, you have lots of experiences, very good record, especially for the exits. So can you please, what are the good indication for right timing for exit? Maybe just continue after the Polo to define the timing.
Can you hear me? Sorry. All right, thanks, Brad. Okay, so I've only had one good early exit, if this is what we're talking about, and that was after 14 months. And that was more or less that the corporate buyer knocked on the door of that particular company, wanted to buy it. So it wasn't a structured process to sell the company. And I would say that starts with L and finishes with K, and that's the secret sauce, it's luck. The other kind of early exits that I've had have been partial exits where, you know, VCs would buy us out partly, and those are never good because there is only one buyer and a lot of sellers. I think what we are trying to reflect to is a little bit of a new phenomenon where there has been actually early exits that have been good. I would say especially Israeli companies are very good at that, to actually spot a specific technology that they know even before investing that there are a lot of corporate buyers for. So they kind of reverse the process and actually think about what does the buyer need. Then they invest in that technology before the buyer actually gets hold of it and then sell it. And I think it's smart. I'm not a specialist in that, but I think it's a phenomenon that especially the Israelis are good at, and some companies in Silicon Valley are good at that, building that bridge between Israeli companies and the US. I haven't seen it a lot in Europe yet, nor in Asia, but maybe it will come.
Yeah. So,
These are good exits. Now, the other exits that I think Paolo is referring to as well are the so-called acqui-hires. So these are companies that, you know, are good companies, never get VC funding, and are sold for 25, 30 million. They're not necessarily only acqui-hires. So maybe we invested on, let's say, between 2 and 5 million, and we sell on 25, 30. That's good money. Mm-hmm. And I think, you know, the bulk of the exits, like 85% on all exits of angel exits, are in the span of 20 to 30 million dollars across the world. So actually that's the big majority, not what we read in the news about all these mega exits that we see. Mm-hmm. So that is actually, now what people try to claim is that these cycles are a little bit shorter. Now again, I haven't experienced that so much myself.
Okay. So it really depends on the industry that you're investing and portfolio, of course, as an angel investor. If you're a pure angel investor, that the portfolio you have is also important, the timing for the exits, and also diversification. If you have a...
Yeah, I would say if it's a breakthrough technology, it's probably easier to get, you know, a really good exit in short time.
Yep, of course. So, Brett, I have a question for, especially for the blockchain, that you have a lot of experience. So specifically for this industry, what you can say about the early exits? Is it different from the others, or what you can say?
Well, it is different because everything is accelerated when you put it on the blockchain. It's a very hot industry, it's a hot technology, and what happens is, if a regular internet-enabled company is maturing in 5 to 7 years, the expectation both from stakeholders, so coin holders or the founders, or in some instances VC backers, the expectation is that that same maturity is going to be reached in months, which is not realistic, but it still accelerates a lot of the things. So as an angel investor, if I have a traditional investment, I would call anything less than 5 years an early exit because it's going to be much shorter than the expected time frame. In the blockchain crypto space, it's going to be a year or two. And if projects are able to raise financing that quickly, traditionally it takes a year or two to raise your angel round and then bridge it to a VC round. Now it's done in seconds. We just did an ICO for Gibraltar Blockchain Exchange, and it closed in 9 seconds, $27 million. So when you raise the money that fast, it gives you a lot larger head start, so because you're not constantly raising, you have the money in the bank, you just need to have the right team and execute. So of course exits are a lot earlier. Now an early exit in blockchain, I haven't had one, because that would mean you're selling before the technology hits the market. I mean, the technology still needs to be built, the business still needs to launch. So if you sold before that, I think that would be a short-sighted move. That wouldn't be good. Yeah. As far as early exits in this space, I think it's too early to say what would be a good early exit or a bad early exit. Having said that, with the caveat, because it's a liquid asset, there are people who get in and get out of crypto assets at the worst time possible. A lot of people started buying crypto assets at the end of last year when the whole market cap as its highest. And then in January, when there was a correction, they started selling. So buy high, sell low is not the recipe for a successful investment. And I think those were early exits that were forced by fear, and they were bad.
So I'll echo that. So like I mentioned earlier this morning, we've done 3, and maybe it's actually the first time I'm sharing this publicly at least, but the one we did in 27th of December, we basically got founders allocation in. So given that we are investing so early, we are completely aligned with the entrepreneurs of the project. And that means also from an exit point of view that we're completely aligned with them. So in that specific case, the 27th of December, which is Bound Resources powered by Kenya, we are locked in for 12 months. So the ICO happens in 12 months. We can't sell in 12 months. And then we are vested in 4 years. So we can only do partial exits during 4 years, which means in total locked in for 5 years. So that's the first example. The second example, Bluzel, that we originally invested in 2 years, we raised 19.5 million. Sorry, the first one was 12 million Australian dollars. The second one is 19.5 million dollars. There, the project is a little bit more mature in terms of that there is a product already starting to be on the market. We locked in for 6 months together with the entrepreneurs and then vested over 4 years. So what that really means is that you can start to do, potentially at least, a partial exit, as you can hear, somewhere between 6 and 12 months after the exit. Now, are you going to do that is a second question, right? It's very similar to an IPO thinking. You don't want to sell too much because it's a smart contract, everybody can see it. So it's like the insider trading is completely transparent for everybody. Like there are no dark pools. They know who has sold what. So you don't want to sell definitely too much, like what Brad said, when the product is commercialized. You may have the right to do it, but you may choose not to do it.
Mm-hmm. So Paula, it's for an angel investor, there's also some responsibility for the secure and early exit, right? Meaning that as an entrepreneur, of course, they create the company, an angel investor, and later on VC and an IPO and so on. So as an angel investor, what's the qualification, the role of qualification of the angel investor for the exits? Can you just give some idea?
Of course, it's very important that you agree with the entrepreneur when the exit can happen, so that it can be in a structured way. One thing that was mentioned here, and I think it's relevant, is allowing other investors to exit. For instance, the problem of when you list a company, for instance, is not listing the company. The problem is the liquidity of this company in the market, because if someone wants to exit the company, and it's possible by the contract, and let's say wants to sell 5% of the company, but there are no buyers in the market, then this company can come down 50% of the value because there is a lot of stock being sold. And this affects all the other shareholders. So when you are an angel and you are entering in a company and you want to make sure that there won't be any damage in terms of the stock price, or as Dusan mentioned here on the ICO's opportunity. So the way to prepare an exit, it's very, very important. And this is one of the discussions that usually takes more time with me and the entrepreneur to discuss, is the time of the exit and when can be triggered the exit. Usually what I try to agree with the entrepreneur is that for a certain period of time, we can only sell mandatory, so we can do a drag-along clause if the value of the company is above certain value. But after, let's say after 4 years, there is this lock period for 4 years, and then after the 4 years, then sometimes I put it completely free, so any opportunity to sell, of course there is an option for the remaining investors and entrepreneurs to buy the other investors, but anyone can sell without a minimum price. Because if you define artificial minimum price that the company will never reach, then you are unable to sell. So and the entrepreneur is there, and you are unable to sell. So it's important that you can agree on those conditions. Let me just tell you that we are talking about here, let's say, two possible ways to invest in a company. So angel or equity investment, and on these ICOs. But there is a model in US that is called the revenue-based financing or royalty-based financing, which allows investors to make a loan to the company with a cap. So, and says, let's say an investor gives a loan of $100,000 and agrees that he will receive $300,000, and all the revenues of the company, 10% goes to the investors. So usually the investor will exit this company in 3-4 years. The exit starts in the next months. When the revenues of the company come, he receives 10%. So this is another way of having early exit. Of course, there is a downside on this model for the angels, is that if the company grows fantastically well, the angel is the profit of the angel is limited to 2-3 times the money that he invested or she invested, and not 20 or 30 times.
Maybe it's nice model to have one parties, let's say $200 investment, 100 such a model, and the other one is there for upside. Maybe, yeah. Because in Turkey, what we can say for the startups, for the especially angel investment, is a major point for the exits, because it's not very well developed for the exit environment, especially IPO and the VC. So angel investors really want to see the exit timing and what they are going to receive. So it's affecting the decision of the being an angel investment, especially. So I would like to ask the audience if they have a question. I think, is it? Okay.
My question. My name is Deniz Mısır. I work as a family officer. My questions are on the ICO. I'd be happy to learn a bit more about the advantages and the disadvantages. Thank you.
For investors or for entrepreneurs? Both. You want to start? I can start. I mean, for entrepreneurs, one major thing normally they claim that it's non-dilutive for existing investors in the company and for themselves, given that it's a tokenized structured. I have a little bit of a question mark around that. The second one is that normally the fundraising process is a lot quicker. Like we mentioned here, two, three companies that I mentioned, they raised $12 million, $19.5 million, which is almost like a Series B or C that they really, managed to raise at seed stage. So basically, bigger amounts that they can raise in a short period of time. So I think that would be advantages for the entrepreneurs. One big disadvantage for entrepreneurs is the Telegram community that is after them. So in Bruzel's case, we have 27,500 on Telegram, and they keep asking questions all the time. So if you think about that you've done an IPO, at least, the shareholders ask questions to the investor relationships guy in writing, in email, and slowly. Here it goes on 24 hours a day, 7 days a week, 24 hours, like questions, questions, which basically for immature entrepreneurs is very tough, because then they keep spending time on answering questions to investors as opposed to actually develop the product, which they should really have a laser focus on. That's why they raised money. So that's really from an entrepreneur's point of view. From an investor's point of view, I would start with the negatives. There is very little, if any, governments, at least the way we are used to it in terms of angel investors and VCs. So it's very, very limited. Now, Brad can contradict me on this, and maybe there are things in the smart contract that you can write, but in general, we have had extreme fights with our entrepreneurs in terms of governments, in terms of trying to get what we think should be governments in control, because basically the general view is that it's the crowd that should decide together with the entrepreneurs about any future movement of the project, and not the guys who are sitting on the board kind of and trying to control it. So that would be a negative. A positive for the investor's point of view, I think I mentioned in the morning, it's liquidity. I mean, that's the name of the game. It's really liquidity. So a lot of these investors that are coming in are having a hedge fund background, a family office background, not traditional VC actually background. So there are definitely different investors that we are not used to that are coming into the ICO and not just the traditional VCs. So I didn't put them kind of in a good order, but a couple of positive negatives for entrepreneurs, positive negatives for the investor.
Brett, do you want to add?
I just want to add a couple things. I think the biggest advantage to the entrepreneur is access to a global pool of investors. So before the ICOs, before the tokenized model, most of the time you could reach to your local angel investors and local VCs and local family offices, and a few startups that were slightly well-seeded could do a roadshow and potentially have a variety of investors come in. But first with crowdfunding, now with crowd sales and ICOs, the phenomenon has become global, which is really important because not only it democratizes access to capital for those areas of the world where there wasn't a Silicon Valley, there wasn't, you know, a financial center that they could go and draw all these investors from. But also for the investors, because the selection of potential investment opportunities has widened and has become global. So when we're talking about an ICO, I think it's important to understand maybe it doesn't change much for successful angel investors who had access to a good deal flow and were accredited and could invest in whatever they wanted. But for investors who weren't accredited and could not get the deal flow they wanted, now they have access. And on the entrepreneur side, again, now a very technical, hardworking team from Russia can raise tens of millions of dollars and don't have to worry about moving to Silicon Valley, don't have to worry about learning English, don't have to worry about immigration, none of that. And it's a game changer. Every time I talk about blockchain and cryptocurrencies globally, one or two people from the local group come and say, you know why this is really important? Because now we have the same opportunities as Silicon Valley startups and Silicon Valley investors. And I think that's a huge leap forward for a global community to come together and bring good ideas to life.
I think the main advantage of the ICOs and this way of funding companies is that they can go global to fundraise, as it was mentioned before. Someone in any part of the world can just get the money. There are some disadvantage. The other advantage for the entrepreneur, it gets higher valuation. Some disadvantage was also mentioned. Were also mentioned by Dusan, is about this problem with a lot of investors. So this can prevent a follow-on round by angel investors. So if I know a company that has this structure and has all these, let's say, shareholders, probably I will not invest in this company because it's a mess. It's going to be a mess in terms of managing all these, let's say, shareholders and all these structures. But in terms of on a short term, for the entrepreneur, it is great. And for the angel, I think there are models that can work. So what is the model that I think it can work? If this company has a lead angel working with this company. So this company finds a lead angel that will support in terms of mentorship and networking this entrepreneur, and then they can do this ICO. So this gives confidence to the investors that there will be someone taking care of their money, because the entrepreneurs don't need just money. We are talking about how quick they get money, but they need networking and they need mentoring. And people that usually go on ICO, they don't invest so much money, so they are not going to spend time supporting this entrepreneur. And this is one of disadvantage and of this kind of instrument, as it is crowdfunding, equity crowdfunding, the same type of issues. And that's why angel investing is still here and will keep here in the market.
I completely agree with that. I mean, how many of you have heard about AngelList? Can we see some hands up? It's not that many, well, half. So basically what AngelList has done, they've launched CoinList. So some of the projects that are on AngelList go straight to CoinList. So they kind of go there, are kind of, you know, syndicated. The due diligence is done by Gil Pencina or some of the kind of leading angel investors who've done tons of deals. They know how to do it, and then they ICO it. And I really believe that is a really, really good model for what Paolo said before. And one thing which is great about it, you're not dependent on the VCs anymore. So that is really, really great. So I think the success ratio that we have of follow-on investment, that is one of the KPIs that every single angel group counts on, would be way higher in this way. That doesn't mean that everybody can do an ICO, right? But at least you control your destiny in a way better. I do need to say, though, that the negative side, like if something goes wrong with this ICO, right? It's not just that I'm losing my money, it's not just that I'm losing my reputation, but I can also be attacked illegally as well, right? So you also have a downside, which is way bigger than just in angel investing. Normally, as a director in a company, in a normal startup, you get very limited exposure. Here, suddenly, there are thousands of people that have invested in some kind of tokens that are not very clear, and you're sitting there as a director and angel investor, so the downside is really big there. So just, I want to make sure that it's not just upside, it can also go horribly wrong if something goes wrong on governments, like the Tezos case that you might have heard about, which was a really big mess between US investors and Switzerland, and some kind of foundation model which was completely intransparent. So there are big, big downsides as well.
Just 2 weeks ago, I received a project that was a barber's live booking system. And the project was that it was with artificial intelligence. And they were going to do a pre-ICO. And it was, of course, in blockchain. So this is a normal project that doesn't need this, but entrepreneurs think that they will get higher valuations, and so they bring all the hype. So artificial intelligence, blockchain, and pre-ICO, these are the three words that people think that they will have a valuation 10 times bigger than without these three words. And this is a problem to the market as well.
Okay, thank you. We have 2 minutes. Shall we continue for the second question, or? Okay, but I need your help because I don't have my glasses with me, so I cannot read the second question as a moderator.
Was there a hand up on this side of the room?
I think there is another.
Yes, there is. Matthew Gamser. He's all ready to go. He's not even going to wait for his panel coming up next. He's got a question.
No, this is a great panel, and I'm sorry you don't have more people hearing it. But I wanted to ask, following on from this, you know, angels are not just there for the money. One of the key things about angels is the mentoring and the patience. And with all these people piling into ICOs, in many cases motivated by the potential rise of the cryptocurrency, and perhaps not caring as much about the underlying company, is there a risk that if you know, that an ICO could be the wrong thing in many cases of, you know, because you'd be bringing in all that governance distraction and management distraction?
Yeah, I just want to be clear. I don't think angels should invest in ICOs themselves. I think they should invest before. So what we are doing is that when we have an embryo white paper from one of those companies, all 50 co-investors go through that white paper and give feedback on that white paper, both on the commercial side, on the technical side, on the security side. I've never seen my group more engaged ever than around that, because actually it has a direct impact on if the white paper is good or not. So I really believe that, you know, the positioning of angels should be before the ICO and potentially in the private ICO, but not in the ICO itself.
Okay,
because
so
then
I'm assuming that,
Yep.
but so then what advice can you give angels about how do you decide when it's the right time and when it's too early to ICO?
I would say that the entrepreneurs has to come to you and explain to you what the magnificent reasons are for tokenization and using blockchain in the companies. And it should never, ever be an investor-imposed thing. You can give them, you know, the tools, the knowledge, come to conferences and all that, but it should never be imposed from the investors. That's number one. And number two, they should never, ever think about it as fundraising, but how they get customers, if they want to go into utility token, which is really how we are working with the ICOs today. So they should really think about, this is a mechanism for me to get early adoption. If they get these two things, then you can start to kind of move. If they can't convince you, you shouldn't go for it.
We have a litmus test, and I know we're over our time, but if you can do something without the blockchain, then don't do an ICO, because it's not the right fit. If your project really requires the use of blockchain and it's a native project, then there's a use case for ICO, which then, of course, you want to convert into a community building, customer base building activity, not just fundraising.
And as a Dusan, as a banker, let me translate your words. As a banker, I can say that you are taking a risk with the ICO as an angel investor, high risk. So that's why they should convince you, right?
Well, I think it's part of that, right? Being a director of this, the risks are even higher. So you should be more convinced than ever that this is the right thing, because the risks are there. The rewards are higher, we've talked about that, but the risks are way higher as well. So the risk-reward paradigm is way different from the way we usually do business.
So I think we're done.
I think you are, and you've done a marvelous job. Thank you so much, ladies and gentlemen. Let's have a big round of applause to thank our panel from Palo. Dusan, we'd also like to thank Dusan and, of course, Brad for bringing his Bitcoin socks up on stage. We love them. Ladies and gentlemen, let's have as big a round of applause.
We get another false applause.